So the general behavior of the three US markets never really fails to amaze me. This week is really a highlight of really some bipolar tendencies, some very erratic trading behavior taking place across all three of the US markets. Let's just have a quick recap on what has actually occurred over the past 4 trading sessions. As you can see on the Monday, we came into the trading week. The market sold off about 300 points. On the Tuesday, it continued the sell-off down another about 200 points to our first target at 17,371. No later than one day or the following day, we were up more or less another 200 points. And then as at Thursday's trading session, we have closed on the Dow Jones Industrial Average up another 323 points. Really, the net movement for the week is so marginal. Here we are on the Monday opening the week. Here we are on the Thursday closing the week. In between, we have seen about a 400 point swing to the downside and then a 400 point swing to the upside. This is really good for swing traders. It's really good for day traders. It pulls your hair out, or it raises your stress levels if you're holding long term and seeing these very erratic, highly volatile swings in the markets and stock prices for long term investors. Overall, the market, it's really shaking out additional buyers and sellers at and around these all-time highs on the Dow Jones Industrial Average. I'm very excited to see how these markets are going to open and trade as at Wednesday in the analysis which we are going to do on the 3 US markets over the weekend, okay? Very excited to see what this market, or how this market leaves us at on the Friday, okay? Again, on the S&P, we've sold down below our first entry. Coming into the week around 2059, we hit our first target. We came very close to our second target, and then again the following day, on the Thursday, we start the upkick on the S&P 500. When we have a look at the Nasdaq, again the story is true. We were speaking about this gap being an island reversal. We see the continuation down to the downside on the Monday and Tuesday. We hit our first target at 4,614, and then we see again a very erratic bounce to the upside. We have a gap actually between Wednesday and Thursday's trading session. This in and of itself is saying distribution. That's what I'm seeing across all 3 of the US markets. We're really struggling to eke out higher highs on any of these markets. And the erratic nature, the high volatility nature, is saying that something's going on under the surface of these markets. People may be distributing long-term, or institutional hedge fund managers or money managers may be distributing their positions. Now, again, it's too premature to start legging into that philosophy or to that hypothesis. We're soon going to see if these markets can break out above the all-time highs going back to late December. This is going to be a very key signal in the markets moving into and transitioning into 2015. If we cannot break above these old swing highs and the market cannot continue to break higher, this is going to be somewhat or significantly bearish for the markets. Now again, whenever you see a market sell off and see such a strong bounce, you have to remain understanding at least that the benefit of the doubt is with the buyers and that the markets are naturally healthy. All right, anytime we see a flinch in the technical armor, all right, in what could be the possibility of a technical break to the downside, the buyers show up and the market continues higher. This has been occurring really since mid-December 2014, when we saw the Fed announcement come in, or the fundamental analysis come back in, and really provided a strong base for the markets. Having a quick look anyway at the US dollar. Let me just get the right chart up first of all. We need to go S, ticker symbol sign, DX. When we have a look at the US dollar again, I put out a video yesterday about this significant price point at 91.9 as a basket, or as the US currency against the basket of competing currencies. We were really looking for a slowdown at this price. When I changed to the weekly, you can see that we haven't actually slowed down yet. Now, this is quite surprising because going back in time, we really need to go back about 9 or 10 years. Let me just change the line chart so you can see this. Really going back to 2004, 2005, 2006, 2005, 2006. This is the level which we're looking at. And you know what? We can even go back as far as 1994, where, of course, let me just move this over so I can show you. This is where we're trading at the moment, going across, where we have been, or at least found resistance at, going back to 1991, going back to 1993. It acted as support in 93, 94. It acted as short-term support in 94. This is just a very significant price pivot point right here. If the US dollar breaks above this point, now again, it's too premature. One day is not enough in the way of the US dollar index. We need to see again at least 2 or 3 days price action around this pivot point. But if this market continues, or if the price or the appreciation in the US dollar continues, the next point that we're really looking at is 96.9 cents. All right, now this is a long way away. I can't see this happening in the month of January. I truly believe that we are going to see some selling pressure at this pivot point around 92.3 US cents. So please pay attention to the price of the dollar, because this is going to directly impact the price of the US markets moving forward. Now, again, these markets are very erratic. They're very structured to a degree, but the bounce off, or say the bounce off and the breakdowns at certain pivot points are happening very, very quickly. Generally, we like to see these things occur over 2 to 3 days and then see the bullish bounce. What we're seeing is an immediate bounce from targeted support levels, which is very, very bullish for the overall market. Again, just to summarize, we need to see these markets break these swing highs going back to late December before we get carried away on any long-term price continuation to the upside. That's really what I want to address in this market update. So thank you so much for listening. I wish you all a very well Friday's trading session. I'm looking forward to the analysis, which we'll do over the weekend. Goodbye.